Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because for the first time in over 3 years, we have a full breakout on the global liquidity index. And it's crazy how much can change in only 3 months. Just 3 months ago, I was warning about this global liquidity downtrend and what that could mean for Bitcoin's price, but I was ignored because everybody was saying that Trump's strategic reserve was going to change everything and Bitcoin corrections were no longer possible. And here we are only 3 months later and I'm being told the exact opposite. I'm being told this global liquidity uptrend doesn't matter because Trump's tariffs are crashing the global economy, so Bitcoin rallies are no longer possible. And I know most of this global liquidity uptrend has been triggered by the huge drop we've seen in the US dollar index, but there's a reason why I've had this area under 100 labeled as the risk on region for over a year now, but this is the first time that the dollar index has actually been able to break down into that level. And the last 2 times that happened, Bitcoin went into a mania phase, blow off top. Now, of course, Bitcoin is a bigger asset now, so I'm not expecting the moves to be as aggressive, but we know that Bitcoin's main use case is as a currency debasement hedge. And with the US dollar being the global reserve currency, big devaluations in the dollar are very good for liquidity globally because it allows central banks around the world to devalue their currency as well because it gets priced against the dollar. And that's what results in these huge risk asset bull markets. And for the first time since June of 2020, we have the US dollar index breaking below that pivotal 100 level once again. And you can see this very clearly if we look at Bitcoin's correlation with global liquidity over the past decade. Now, this is a global liquidity measure that doesn't just look at M2 or global M2. It also includes central bank balance sheets of all the major central banks globally. And that's why I prefer this metric over just looking at global M2 because I think central banks like the Federal Reserve and the European Central Bank have a huge impact on liquidity globally. And we can't just look at the money supply, but you can see here very clearly that there have only been 2 other global liquidity consolidations and breakouts over the past decade. And the one that we're witnessing today has gone on almost twice as long as the previous 2. And usually the longer something consolidates and goes sideways, the bigger the eventual breakout once it happens. In the 2015 to 2017 bull market, you can see that Bitcoin bottomed within a month of global liquidity's bottom. And then you can see Bitcoin's parabola really kick off once global liquidity broke out of that consolidation. And Bitcoin usually tops a bit before global liquidity because eventually investors just start taking profit so aggressively that it results in the blow off top phase of the cycle. And that's why I spend more time focusing on global liquidity bottoms and breakouts as opposed to where global liquidity eventually peaks. So if we look at the 2018 to 2020 cycle, we can see that Bitcoin bottomed within a month of global liquidity. Bitcoin bottomed again in March 2020 when the Federal Reserve threw the kitchen sink at the economy to pull us out of the global shutdown. But just like the 2017 cycle, Bitcoin topped first because whales and big investors started taking profits aggressively. But a few months later, global liquidity ended up topping as well. And so far in this cycle, Bitcoin bottomed within a month of when global liquidity did. And here we are witnessing the breakout of the largest global liquidity consolidation we've ever seen. And I don't think central banks have any other choice to deal with the current global macro landscape without printing money, devaluing currency, and providing more liquidity to their economies. And we have to keep in mind that the Fed never even stopped doing QT. So if anything, today's backdrop is a lot more similar to August of 2019 instead of a cycle top for Bitcoin. And we know the Fed is going to start cutting rates this year, which should help with liquidity as well. And this is why I called Monday's free weekly report that I always link below the liquidity tsunami, because we can clearly see that central banks around the world have no choice but to print money and devalue their currency. And this should be a huge tailwind to risk assets like Bitcoin, especially because Bitcoin doesn't have to worry about earnings. It doesn't have to worry about tariffs. It is just a fixed supply asset that protects investors from currency debasement, kind of like gold does, but in a newer, more digital fashion. So we'll see what happens, but as of right now, this looks like a clear breakout to me, and it's hard not to be optimistic on Bitcoin's price action over the next few months. And this is why the early cycle scenario is still my base case, with Bitcoin making a new all-time high very soon. I'm open to things taking longer if there's more macro uncertainty or more surprises, but I still think it's very unlikely that the cycle could be over for Bitcoin when global liquidity is just now breaking out of a 3-year consolidation. This is why I'm quite comfortable with my current portfolio, a decent sized cash position in case there's something we don't foresee happening, but the majority of my portfolio is still exposed to the market, and I still have plenty of upside exposure if this cycle continues, and I'll continue to follow my portfolio system so that I don't make any emotional mistakes. And I finally completed the last module of the portfolio management system course as part of the crypto and macro enjoyers program, but I did say I would give a heads up before ending the early bird pricing with lifetime access, so I'll leave that open for 1 more week before going to the regular pricing. But as we look forward, I believe the future still looks quite bright. We have inflation coming down, as we can see here with the Fed's preferred measure of CPI, core CPI. We have trueflation, our leading indicator of inflation, telling us that inflation is likely going to keep going down over the next few months. The labor market is very slowly weakening, but is still nowhere near recession levels in terms of the unemployment rate. And we're seeing something quite similar in our proxy for layoffs, initial jobless claims, which is around 215,000. And usually recessions don't start until we get closer to 360,000. And the Fed should have more room to ease now that we've seen this big correction in the S&P 500 and so many investors are worried about tariffs. And that makes Bitcoin's price action that much more impressive. It has held up incredibly well compared to the S&P 500. I know a lot of people are saying that's not true because Bitcoin is down 30% and the S&P 500 is down 20%, but you also have to account for the fact that Bitcoin is up about over 500% since the bear market lows, and the S&P 500 was up about 80%. So I'm saying that Bitcoin held up well when accounting for the amount of gains we've seen on Bitcoin over the past 2.5 years or so. And in previous cycles, a 20% crash on the S&P 500 like this one would have resulted in a 50 to 60% crash on Bitcoin. So I do think this time is very different to those previous occurrences. And I do think Bitcoin is proving itself as a more stable and decorrelated asset, a lot like what we've seen from gold over the past few years. And there does seem to be an interesting correlation with a lag between Bitcoin and gold. If we just offset gold's price action by 100 days, we can see that so far this cycle, they have followed each other quite in line. Whenever gold pauses, Bitcoin goes for a rally. Whenever gold is rallying, Bitcoin pauses. So we'll see if all of these things that we've talked about in terms of global liquidity and what we've seen from gold, we'll see if that ends up carrying over to Bitcoin and Bitcoin puts in new highs in the near future. We know that right now Bitcoin whales are absorbing a ton of supply. We know that profit taking has slowed down significantly. We saw a ton of profit taking in March of 2024, as we can see with the positive realized cap net position change. So this only looks at coins that are moving in profit and doesn't look at the ones that are moving at a loss. So we saw huge profit taking in March of 2024, but once that slowed down significantly, Bitcoin bottomed. We saw huge profit taking in December of 2024. And this is something we talked about on this channel while we were taking profits as well. And now that profit taking has really slowed down. And that could be another sign of a local bottom for Bitcoin here. We also see it in the short-term holders MVRV. Right now, short-term holders are underwater, which usually means there's less panic selling, just like we saw in September of 2023 and in September of 2024. That tends to reduce sell pressure quite a bit. Now, of course, if we're in a bear market, we would expect this to stay in the red for quite a while, but that's why we have our invalidation with the 50-week moving average. Once it breaks, it's incredibly likely you're entering a bear market, but as long as Bitcoin holds above it and maintains it as support, like what we've seen so far, I'm not convinced that we're in a bear market, and I still think Bitcoin has higher to go. And I think everybody who's waiting to go all in the 60,000s might get what they're hoping for. But if they do end up getting that opportunity, they have to be careful what they wish for, because it likely means that Bitcoin is headed a lot lower and that we are entering a bear market. So it would be a lot better if Bitcoin were able to hold its bull market structure and rally higher from here. But I am still quite impressed with what we've seen from the ETF investors' strong hands. Let's keep in mind that these Bitcoin ETFs have been around for less than 2 years, and after seeing huge inflows, we're still seeing very little outflows, even with all of the macro panic we've seen and the sell-off we've seen in traditional markets, not to mention all of the fear and extreme fear we've seen in this market specifically. So I'm still impressed that ETF holders are holding for the long term. They're diversifying their portfolios by adding some Bitcoin exposure, and they're not panic selling the way they used to when the S&P 500 would have these type of corrections in the past. And for any investor with a longer time horizon, I still think Bitcoin is right in the middle of a fair value range. Are you getting an incredible discount and deal like you would in a bear market? Not really. Are you buying a local top when the media is telling you that things are going to be getting a lot better and we're only going higher from here? I don't think we're in that type of area as well. As of right now, we're just near the 50-week moving average, which tends to be fair value for Bitcoin. And if you want to get a really good price, you want to buy closer to the 200-week moving average. But I don't know when we're going to see Bitcoin revisit that area. It could happen after we put in new highs and perhaps in a future bear market. We'll have more clarity on Bitcoin's next move in the short term once we see which way it breaks out of this range. As of right now, we've seen a false breakdown, so our target is the range high. We'll see how Bitcoin reacts once it revisits that level. But in terms of reaction at levels, so far we've seen Ethereum doing okay, retesting its 2017 all-time high and taking out all of the liquidity from these equal lows back in August of 2023, but it's still looking quite weak, unfortunately. We now have Ethereum fees dropping to 5-year lows as transaction volumes lull. And I think it's because a lot of this usage and a lot of this volume is moving to Solana, which has a much better chart. We have a full false breakdown and perfect retest of the 200-week moving average, something we've been waiting for and looking out for. Solana has bounced almost 40% since we bought the dip at about $100 last week, and we're seeing huge inflows into the Solana network. We see it very clearly with this visualization. We have Ethereum, Arbitrum, Base, BNB, Sonic. A lot of assets on those chains are getting bridged to Solana, and we're seeing Solana have the highest DeFi TVL growth out of the top 7. It also has the most volume across all chains, and it's not surprising that it's starting to turn itself around here on this performance benchmark, and pretty soon it's going to be back at break even over the past year. And perhaps if this rally continues and if Bitcoin gets its rally going, we can see Solana put in a nice move. But of course, a lot of that is going to matter on what Bitcoin does and whether Bitcoin's next move is a reclaim of our previous range low or a loss of our March high. Otherwise, it's just more consolidation and chop until one of those happens. But because of this global liquidity move, I think the upside is more likely. So we'll see what happens with global liquidity, but as of right now, the federal government is still running huge deficits and is 23% ahead of where they were by this point in the fiscal year of 2024. And this trend only seems to be worsening, and any type of macro uncertainty or economic issues are only going to expedite this process. And as I always say in this channel, exponential debt growth means exponential money supply growth and exponential currency debasement, which keeps me bullish on risk assets that we price in these devaluing fiat currencies like the S&P 500, and especially fixed supply risk assets that don't have to worry about tariffs or company earnings like Bitcoin. But as always, let me know what you expect. Is this time different? Does global liquidity not matter anymore because of tariffs or some other macro narrative? Would love to know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.